Well, hello, folks out there in YouTube land. Got a big show lined up for you, and let's get right on into it. All right, let's pull up the screen. Yes, NIO, the fourth quarter conference call. We're going to go over that. We went over the earnings yesterday, but I think it's important to listen to what the CEO said about NIO and kind of get into the details about their opinion on everything. And William Lee, he started out, he said 2021 was a year full of challenges for NIO and the global auto industry by overcoming the Rona, semiconductor shortages, supply chain volatilities, and many other difficulties. We have continued to lead the premium smart electric vehicle market in China. Total delivery of 91,000, et cetera, and 109% increase year over year, which is great. It says, although user demand and order momentum remain strong, production and delivery have been affected by the Rona and the volatility of the supply chain capacity. We expect total delivery in the first quarter of 2022 of 25,000 to 26,000, and we'll look at that when we look at the deliveries and kind of give us an idea of what they're going to do in March. We know they're going to be delivering the ET7 on the 28th, and he said the test drive to order conversion rate exceeds our expectations, which gives us great confidence towards the competitiveness of NT2. It said in 2021, the NEV market maintained a faster than expected trend, according to China Passenger Car Association. It grew from 5.9% in January to 18.6% in December. It says NIO enjoyed a 23% market share of vehicles over the RMB 350,000. So they are going for a market share and doing a good job there. In terms of gross margin, so they benefited from the increase of revenue per vehicle and the cost optimization brought forward by this 75 kilowatt hybrid battery. It is a less expensive battery. The vehicle gross margin reached 20.9% in Q4 of 2021 and 20.1% for 2021. So that's pretty solid. I'd like to see that get up above 25%, and I think we'll see that over time. It says currently the whole industry is confronted with the pressures of cost increases. We are paying close attention to the dynamics in the supply chain and working closely with our partners to enhance efficiency in order to reduce the impact to the vehicle gross margin. Here it says, William Lee said, we started to step up investment in R&D. We've seen that, and I'll show you that on the chart. It said we have sped up the development of new products and increased our investments in full stack autonomous driving and other core technologies, and that's really important. Again, we're going to talk about that more when we get into R&D. It says investment in R&D is critically important for near to long-term competitiveness. Starting from this year, we'll be able to see part of the fruitful results from last year's R&D investment and efforts. It says, of course, we know they plan on delivering 3 new products, ET7 being first. So the ET7 is well on track. The product itself has led the industry in various aspects as far as computing power and autonomous driving. So we know about the ET5 that's coming in September. He says that's going to attract a more diversified user base because it's less expensive, and that high tech is going to get the young people excited. So soon we also launch the ES7, which is going to be a mid-size SUV. What they've had before are the large size. And it says they're expected to deliver in the third quarter. So they continue to elevate both their R&D investment and efforts in core technologies such as full stack autonomous driving and battery technologies. We believe the investment in core technologies will also enhance our sustainability and competitiveness. Now here he's talking about the production line upgrade at the JAC factory, and it's in progress, going phase by phase. It says by mid-year, the production cadence across all workshops will reach 60 jobs per hour. We've largely completed the building construction of our second manufacturing facility in NIO Park, finished the equipment installation, and now are working on the calibration of that equipment. It says the plan is to be in operation in third quarter this year with a designed production cadence of 60 jobs per hour. Said the first validation viewed of ET5 rolled off the production line from the F2 vehicle powered production center. So they've already started rolling a few of those off, I guess, to test them and do all the things they need to do. So they're still facing challenges with chip supply, raw materials cost, and of course the Rona and the changing international situation. We'll talk about that. And here they're talking about where they've spent money on general administrative with charging and swapping infrastructure. They have 46 NIO houses and 341 NIO spaces in 155 cities. Said they have 60 new service centers and 179 authorized service centers in 146 cities. So that explains the general administrative. So they're going to be opening up 100 new sales outlets and 50 new service centers and authorized in 2022. So they currently have 866 battery swap stations in 190 cities. They've done over 7.6 million swaps. They have 711 supercharging stations and almost 3,800 destination chargers. They'll be adding more chargers, more battery swap. They're going to get over 1,300 battery swap stations and 6,000 power chargers, and then 10,000 destination chargers in China. In Norway, where they're selling the ES8, has formed an appreciation for its users. Said their monthly deliveries have ranked the top 2 among the 6-seater and 7-seater passenger cars there. Said the successful delivery and high-quality user service in Norway also helped us accumulate valuable experience in providing services in other countries. That's the proving ground. Understand, Norway's where everybody goes and proves their product and works on all the stuff to enter Europe. That's the way it is. Everybody goes to Norway because I think Norway loves EVs. Said in 2022, Norway will bring its product and services to Germany, the Netherlands, Sweden, and Denmark. So again, more expansion, more sales, more revenue. Then they talk about the mass market brand, and I believe that's the sub brand that'll be more affordable, and I know they're working on that as well. They had a loss for the fourth quarter of $383 million, and we're going to go over why that happened. It's all about G&A and research and development, and we'll show that in a chart. It just makes it easier. And it had a year-over-year increase of 146%, and you'll understand why when you see the chart. And, of course, that included some share-based compensation, which share-based compensation is a non-cash item. It's an expense on your profit and loss statement and income statement, but it's not cash out of the bank. It's basically stock-based compensation where some individuals got some stock and you have to treat it as an expense, but it doesn't affect their cash position. It says their balance sheet is sitting at $8.7 billion in cash, which is fantastic. They could pretty much pay off all their debt with cash, which is rare for a car company, by the way, very rare. They're expecting total revenues in the first quarter of $1.51 billion to 1.57 billion. So similar to the fourth quarter, that's actually pretty good in my opinion. You know, not everybody's excited about that, but hey, the first quarter is always the worst. I know they're in production ramp up, but understand they were closed for over a week in February because of a national holiday. So to have a first quarter equal to a fourth quarter is not bad at all. All right, now let's get into research and development. If you want to know why they only lost $40 million in the first quarter of last year, but they lost over $300 million in the fourth quarter, even though their revenues were way higher in the fourth quarter than the first quarter, is real simple. It's research and development, which you can see first quarter was $104 million. They're at $286, so almost triple. And that's very important. The autonomous driving is going to be so critical, and having their computers fast and able to handle 5G is going to be very important for competitiveness and to build kind of a moat around their business. And I like a company that has a bit of a moat, and they certainly have that with battery as a service. But that autonomous driving, you spend all the money up front for it because it's software as a service. Well, software as a service is an 80% profit margin, is pretty much standard with that. So you spend a bunch of money on the front end and you make the money on the tail end, and you make it for a very long time. That's why companies that are based on software as a service sell for really high multiples, because their margins are so high. So I don't have any problem with this, and it's understandable. Now realize this is going to eventually plateau, but the revenues will not plateau. They'll continue to go up, whereas this eventually will hit a balance, an equilibrium, if you will. And here we're looking at general administrative, which we covered the battery swap stations, the NIO houses, staffing, etc. And of course, it's doubled from $182 million in the first quarter to $370. So if you add those two up, there's your difference. You know, that's really the whole difference, is the increases, because the revenues have been going up and their margins are better, but they've had to spend so much to build this ramp. And realize they're in super high growth mode. This is not a company that's anywhere close to maturity. Not even, I mean, it's like a little baby. And it needs to spend this money on the front end in order to not only gobble up as much market share as they can, design and build these new vehicles, the ET7, the ET5, the ES7, and then on top of that, the sub-brand. So they're going to be coming in and hitting that middle income folks and sell those $30,000 and $40,000 vehicles. And they've got to design those and get them up to snuff. So we're really at the infancy of NIO. So when you look at the deliveries, you can see they're expecting a pretty decent March because they only had 6,000 and then 9,600 in January, and they said, what, 25,000 vehicles. So they're probably going to sell, 9,000 plus in March. So that gives us a pretty good idea what March is going to be based on what they've just told us. And hopefully we're done with Chucky for a while. He got us back here when we were closed for 2 weeks while they were building the ET7 line and upping their production ability at the JAC factory. But then over here, we were closed for a week. So Chucky needs to go on out of here. Now, one negative is the Rona. Now, here in the United States, it's way down, way down. But in China, they're having a problem with it, and they're having to shut down some of their cities. So that may be an issue for the short term in China. But here it's gotten way better. So hopefully whatever problem we had, it'll be short-lived over there, but we'll see. But that is a negative. And one of the things that we need to talk about is the elephant in the room, and this is delisting stuff. Now, we know that China has pretty much said they're going to cooperate, and that's big because they've blinked, and they needed to because, look, auditing a company is normal. That is not an abnormal request from the SEC. They should be allowed to audit companies if they're going to be traded on the New York Stock Exchange, and they have to be. And China has realized, they saw their shares of their many companies going like this, heading to penny stockville, and they didn't want that. So they have stepped in. And the thing about the Chinese government and the Chinese country, these are pragmatic people. Everybody thinks they're the same as Russia, or they think they're going to act. They're not. Russia and China are very different. Russia is very much communist, and it's run by one person, this lunatic. Whereas China is, they may be communism as far as politics, but understand when it comes to money, they're very pragmatic, and they're not going to let their companies crash and go to crap over a simple auditing issue. That's just not, that's my opinion. All of this is my opinion, but I've watched them for 30 freaking years.
Thank you for playing. Should we or should we not follow the advice of the galactically stupid?
That's right. I don't see them following Russia's advice or their path on that at all. So I'm much less concerned about the delisting in Taiwan as I was a month ago or 2 months ago. It just wouldn't make sense. But, that's up to you to determine the risk level you're willing to handle. For me, I'm okay with those two issues. And like I say, I might end up being shocked, but I doubt it. And lastly, let's look at the stock itself. It's having a real bad day. They didn't like the earnings. I know in Hong Kong it was down about 5 or 6%, I think, last night, and we're down about 10% right now. It is kind of sticking around that $19.60 area. So it came down below that resistance level of 21. So we'll just have to kind of watch and see. This is a little bit of an overreaction to earnings that I thought were decent. Now, understand, I didn't think they were great, but, they weren't bad either. Now, let's talk about what I'm doing with it. If you've watched this channel, I've got a long position that I started around 15 bucks. I think I'm into it close to 30 now in my long position, and I don't even think about it. It's sitting in my regular account, and it'll be there for years. Now, I've been swing trading this thing in my Roth IRA because of the tax advantages. And I bought here and sold here. It's like this $34 was a good spot, $34.80. And every time it dropped below that, I bought, and then I'd sell above it. I bought here and sold above it. But then we came out with those bad October numbers, and I started selling some. I sold most of it here. But then I started buying, thinking, well, it may do it again. And it didn't. So I'm actually upside down this trade. My last 5 or 6 buys were 24, 22, 20, 18, 16, and 14. Had it gone to 12, I'd have bought it at 12. Now, I'm still upside down. I'm up here about 25 bucks is, I think, my position. It may be 25.50. But I'm okay with that long, not super long term, but over the next few months, because I think this thing will return to the 34 and eventually go back up to 54 over time. And sometimes swing trades happen quick, like these two. I made this money pretty quickly, but over here, this may take 6 months. It might take 12 months. That's okay with me. I don't have a problem with that holding NIO. And if this thing were to go down in the teens even further, I'd probably just add some more. One of the things that I've done just recently, I got rid of a bunch of my oil stocks. They had skyrocketed. And so I wound up, I've got some pretty good dry powder right now. I made, gosh, I did a 5-bagger on Marathon Oil and a 4-bagger on Occidental.
How's bragging camp going?
So like I say, I'm just going to kind of sit here and wait and see what it does. If it gets down here in these stupid areas, I'll just pick up some more. And that's okay with me. Like I said, I'm not as concerned about it long term as I was maybe a month or two ago. All right, folks, and that's NIO today. Just wanted to go over that fourth quarter conference call. And if you like this content, be sure to hit that like button. Lets me know to continue to cover NIO. And if you haven't subscribed, hit that subscribe button. I'd appreciate it. Give the channel an opportunity. And I hope you did like the content. And we'll see you next time on Mr. Frugal Investor.